We asked if Trump's proposed tariffs would help or hurt the economy, workers, and consumers, and the results were exactly split 50-50. On his broader policies, more than two-thirds of respondents think he'll be good for the economy and the markets. 71%, in fact, think so. Let's bring in Brian Jacobsen, the chief economist at Annex Wealth Management, to discuss. Brian, do you think the dollar's too strong? Welcome.
Hi, thanks for having me. Yeah, I really enjoyed that dialogue you guys were having because you actually shared a lot of really great wisdom there about the stronger dollar has really been a headwind for a lot of manufacturing, so for people who export, but also some of the weakness in the dollar that we're seeing is due to the anticipation of tariffs. We've already seen like a 4% depreciation in the Chinese currency, and just look back at 2018 to 19 as to what happens with currencies, that the Chinese currency depreciated pretty significantly. So that's almost like a shock absorber against some of the tariffs. The ones who ends up paying the price, more the manufacturers, the exporters, the farmers. I'm here in Wisconsin, and farming is really important for our economy. And so what does it do to U.S. competitiveness in those export markets? I was a little surprised by the results that you had with that survey, 50-50. I was thinking, did you only ask two people, right? Like one said it's good, one said it's bad. I mean, to see 50% was a little shocking.
No,
so
but Brian, I'll weigh in on that because I think that I had an opportunity to sit at our CFO council with a bunch of CFOs from different companies, and everyone has a different potential experience with tariffs, right? Some of them are importing goods, some of them are sourcing their goods locally, and I don't know what the makeup is of that group of companies, but if you are importing goods, you're going to say it's terrible. If you're sourcing your goods locally, it's really almost no impact. So, and I think one of the things that I would respond to Ms. Kelly Evans about when it comes to the dollar is one of the extraordinary things about the U.S. is how dynamic the economy is. We have companies in this country that benefit from a strong dollar and those that it will hurt. And it's very, well, who benefits is people who are importing those things,
I would
right?
say tourism
Their
companies.
relative cost goes down. Right? People
it's
are
good for the cruise lines.
Brian, maybe you talk about that. 40% of S&P revenues are derived from overseas, so it may have an inordinate impact on the stock market.
That is correct. And I think that's one of the key things is that the stock market is not the economy in terms of the composition. So you look at the 40% of revenues, the U.S. economy, we don't actually export, 40% of GDP. It's a much, much smaller number, right? But also it's important to remember that's just revenues. What about their whole cost structure? Businesses over the years have developed different tools and techniques for managing foreign exchange risk. They can, locate their production facilities in other countries to sort of match the cost with the revenue in terms of the currency, hedging instruments, the way they finance themselves. And so I'm not sure that tariffs are necessarily going to be as disruptive to the market rally that we've seen as maybe what a lot of people think at first blush that it might be.